Hello everybody, it's Tortoise Investing. It is a Wednesday. Coming at you with another video. Very quickly, guys, got something I gotta ask yins. So, do you like this format of thumbnail? Or do you like the old with the dollar signs and the money in the background that I have been doing? I think this one's more neater and looks more professional, quote unquote. But I don't know. Let me know. I really would appreciate your feedback on this so I know what kind of thumbnails to make going forward. I'm probably just going to leave this video blank until I get a little bit of feedback, and I'll make it. But, yeah. Up to 191. If you have not, please think about joining. It is super free and super easy to do. All you got to do is hit that red button, and it make me super happy. And make sure to like the videos, comment in them. Helps make the algorithm really, really happy. But today's video, I was very quickly going to go over 3 things that I wish I would have known whenever I first started investing. So, number 1, before investing in anything, it is always a good idea to do your research in the company. Learn what it means to have, learn what a good revenue is, EPS growth, what a good EBITDA is. Learn before throwing a bunch of money at stuff. And I use Qualtrim Insights. There are things that you can use that are free that will help you if you don't feel like paying for any services. Example of that would be macro trends. You can literally just go in here, type in any holding, Apple, pull up the revenue, gross profit, net income, EBITDA. Everything is at your fingertips, and with macro trends, it's free. So, I mean, research is always important before throwing your money at anything. You want to make sure you're going to get a good return on what you invest capital into. There are stock screeners out there too. PortfolioSlab.com has a stock screener. Go through there, play around with it. I love this website. I could spend all day on this website, honestly. There are so many different things: portfolio analysis, stock comparison. You can put in your own portfolio and compare it to anything that you want. Like, I've got my portfolio in here, and I can compare it directly to the S&P 500, and it tracks it year to date, 1 year, 5 year, and I can see how my portfolio would have done compared to the S&P 500. But yeah, guys, very important. Do your own research with things. Make sure you're knowledgeable before just jumping in and know anything. Numero 2, I had a terrible habit of this when I first jumped in, probably the first 6 months, is yield traps. You look at that and you're just like, oh my god, look at that, almost 19% dividend yield. Look at it for 5 years though. Like, really? Hurts. You want to watch out for these. There's a lot of these. There's a lot more than what there should be. But, I mean, it might be a good company. I'm not crapping on anything. It's just this is one of them that comes to mind as a quote-unquote yield trap. Make sure you're not just investing in something because of the dividend yield. That is never going to go well for you. That is always going to end up hurting you in the long run because, yeah, you're getting this really nice dividend yield, but you're losing money over time. It's never a good thing. You can invest in things that have good high dividend yields, but they will give you returns over time as well. Like, an example of that would be Philip Morris. Over the past 5 years, yeah, it's down 6%, but you have a lot of buying opportunities in here to get in below its current price. And Philip Morris is one of those that's growing. Like, if you do research on it, it's got growing revenue, it's got growing profits, a lot of good things going for it. So, I mean, it's got a good dividend yield too, above 5%. Lastly, don't get discouraged on drops. If you buy something and it goes down, do not look at it as, oh my god, the end of the world, I need to sell this. Look at it as, I now have an opportunity to buy a little bit more of this. So, like, just an example would be Microsoft. Microsoft's an absolutely amazing company. Let's say you bought in at 300 here, and it dropped. And it kept dropping. And it kept dropping. You decide to sell. And it starts going up. And you're like, oh my god, I'm going to get back in. It's almost right where I was. And it drops again. And you continue selling. It's just a never-ending cycle if you do that. But if you buy in and you commit through and you dollar cost average. Dollar cost averaging is a blessing in disguise when it comes to dividend investing. Like, if you buy in on these dips, you can enjoy the ride back up. Like, look at it at the 5-year. There's there's some ups and downs here and there, but don't get discouraged. If you've done your research in a company, you believe in a company, you know it's going to do great in the long term, zoom out, take a look at things from 5-10 year perspective. It goes down and you believe in it. DCA. I got into Microsoft around 250, so obviously I'm not buying anymore right now. But I had an opportunity to get in lower and I missed out on it. But you know what? That's okay. I'm not going to sell. If it drops back down to 220 from this level, if it drops 20%, I'm going to buy more and I'm going to hold. And it's going to pay me off in the long run next bull market that occurs. But yeah, guys, there's just 3 things to look out for. Don't let dips discourage you if you believe in the company. Dollar cost average down. Ignore high yield traps. Make sure you get a good a good high yield return on equity company like Philip Morris. None of this is financial advice, just a little bit tips and tricks. And make sure to do your research, guys. Do your research on everything before you buy it. You never just want to watch a YouTube video and then just toss your money at it, because like that's not going to help you as well. But yeah, just 3 little tips that I wish I'd known before investing. It would help me a bit in the long, but you learn every day, and that's how things go. But yeah, hope you enjoyed this little video, and I will see you on Friday for the portfolio update. And until then, see you.